Right now, the US is facing record-breaking inflation rates. In February 2022, we saw the fastest pace of annual inflation in 40 years. It was 7.9%. For context, inflation has historically hovered around 3% in the United States. So if you're wondering what exactly that means for you and how you can continue to succeed financially when the entire country is in a tough economic situation, keep watching because I have the answers right here. Hey, I'm Britt, money coach and co-founder of Dow Janes. And if you want more free education to help you navigate tricky financial situations, be sure to subscribe and hit the bell so you don't miss out on future videos. Now, if you already understand inflation, hold tight. I'm gonna dive into our current inflationary state and what that means for you. But first, let's start with the basics. What is inflation? Inflation is a decrease in the purchasing power of money. Now, that's probably gibberish, so what does that actually mean? It means that $1 tomorrow won't be able to buy as much as it can today. So for example, a cup of coffee in 1970, it cost 25 cents. Today, it costs $1.59. That is inflation at work. It's the price of things going up over time. And when inflation is high, it means the prices are going up really quickly over a shorter period of time than usual. So inflation is the result of the annual prices for a basket of goods and services going up. If the prices went down, it would be called deflation. And one of the most common ways that we measure inflation is through the Consumer Price Index, or CPI. The CPI is a basket of consumer goods and services such as food, transportation, and medical care. And inflation is calculated by looking at the price of each of them and how it changes over time. So if the CPI goes up, it means your money is worth less. If it goes down, it means you can stretch your dollar a bit further. So let's say that you can buy everything in the CPI basket for $10 in 2010. In that case, a $10 bill has the power to buy the entire basket. Pretty simple math at this point. So then in 2020, the basket costs $20. And that means that that same $10 bill can only buy half the things it could in 2010. That means your money isn't as valuable in 2020 because it can't buy as many things. And that's what we mean when we say money loses its buying power. So right now we're looking at the fastest pace of inflation in 40 years. The Consumer Price Index rose by almost 8% through February. And I know 8% may sound small, but think of it this way. The Bureau of Labor Statistics estimates that the average American spends about $400 a month on groceries. An 8% increase adds $32 a month. That works out to an extra $384 a year, which means you're almost paying for an extra month of groceries, but without any additional food. And that isn't even taking gas, rent, and other prices that will also be increasing at the same time. Now let's talk about what causes inflation. To do that, we need to back up and explain a basic economic principle, which is supply and demand. So the laws of supply and demand determine the price of goods. You probably learned this in college econ or maybe even high school. When the supply of a good is high and the demand is low, prices will be low. That means there's plenty of the item and not that many people want it. So of course the price is going to be low. On the other hand, when supply is low, as in there aren't that many of an item, and demand is high, as in people want a lot of them, prices will be high. That's just how it works. Let's talk about an example. Remember when Peloton bikes and Nintendo Switch prices skyrocketed during the pandemic? A lot of people were trying to figure out how to work out at home or entertain themselves, and so those products were in high demand. Take at the same time supply chain issues and making it harder to manufacture products, supply was low. So with a low supply and a high demand, you get high prices. Because of these dynamics, Nintendo almost doubled the price of the Switch. And that in turn gave it the capital to ramp up production and kept demand from getting too out of control. Let's talk about another dynamic that happened during the pandemic. So post-pandemic, after people received government stimulus checks and they saved money during lockdown, now they were ready to spend enthusiastically. Add to this the supply chain issues that we've seen, and you have high consumer demand and low supply of goods, leading to, you guessed it, higher prices. And we saw this with wood, we saw this with gasoline, we saw this with just things you wanted to get at the grocery store and couldn't find anymore. All of that was a function of supply and demand. So what's with all this buzz about inflation this month? Doubtless you've noticed prices going up, especially over the last few months. Like I said at the beginning of this video, in February 2022, we saw the fastest pace of annual inflation in 40 years. Okay, so what does that mean for you? First and most obviously, shopping is going to be more expensive. Items will cost more. If you don't need to buy something right now, don't. If you can limit how much you're driving right now, do so. The other impact will be in the form of increased interest rates. One of the ways the Federal Reserve addresses inflation to keep the economy running smoothly is by raising interest rates. On March 17, 2022, they raised its effective federal funds rate by 0.25%. So if you're not sure what that means, ultimately, that rate influences the prime interest rate, which is what lenders use to determine how much interest you'll pay on credit cards, mortgages, and other loans. So if you're looking to get a new loan, the interest rate might be higher. You might start to notice that out in the world. And if you're already locked into an interest rate, don't worry. Luckily, you're fine. But it is something to be aware of if you're considering applying to new loans in the future. So where is inflation headed, and should you be worried? Inflation relies on so many factors that no one can say with certainty where we'll be by the end of this year. As I said, the Federal Reserve is taking steps to reduce inflation. So it should be safe to say that inflation won't continue to grow as rapidly, hopefully, but it's unclear whether it will come down in a significant way soon. And right now it seems unlikely. Like I said, supply chain issues are expected to persist, which means that low supply will likely continue to be problematic, keeping prices high. We aren't sure what will happen with Ukraine and Russia, but war will likely continue to drive up the prices of energy and gas in particular. The good news is that we do see wages rising. The bad news is that wages are not rising quickly enough to keep up with the current rate of inflation. On top of that, inflation usually hits low-income households the hardest, households that are already struggling to get by with normal prices of rent, food, and gasoline. Just imagine when the impact of those things rises. It's tough. So especially if you're living paycheck to paycheck right now, you might want to start thinking about additional streams of income or ways you can save more right now. Okay, you might be wondering, how does inflation affect the stock market? I'm going to be honest, historically, inflation has not been kind to the stock market. But remember, that's why we always tell you to invest for the long term. Yes, the market may go down, but historically, the market has always recovered. We've seen some significant dips, like the crash in 2009 and the 2008 recession, but stocks have always reached new highs in time. So if you can afford to, leave your money alone. Give your investments time to regain their value. The worst thing to do right now would be to sell your positions and take your money out of the stock market. So try your hardest to fight that urge and just stay invested. If you're wondering how can you invest during inflation to make the most of this time, it is possible to make passive income through investment during inflation. And here are some investment opportunities to shield yourself against inflation. One is gold. Gold has often been considered a shield against inflation because it tends to hold its value. Another is commodity-based ETFs. ETFs are exchange-traded funds. We have a whole nother video on those if you want to watch. Commodities can include anything like grains, precious metals, electricity, oil, beef, orange juice, natural gas. Those are all commodities. And they're an indicator of inflation. So as inflation rises, so does the value of those commodities. And you can broadly invest in commodities via ETFs. The third is real estate investment trusts. You've probably heard of them called REITs. So REITs are companies that manage income-producing real estate. It consists of a pool of real estate of properties that pay out dividends to its investors. And property value and rent prices tend to increase with inflation. Maybe you've noticed housing prices and rent increasing in your area. That makes real estate a safer bet during inflation. Finally, one other way you might want to invest is just in the stock market. So even though the stock market typically takes a hit during inflation, there are index funds like the S&P 500 that track companies that may be able to weather this time of inflation. So for example, in the S&P 500, it consists largely of technology and communication companies. They account for 35% of the index. And those companies are capital-light businesses. So theoretically, they should be able to weather inflation well and could be a good investment. Just a disclaimer that none of this is investment advice. This is just education about your options during inflationary times. So how can you best protect yourself during time of inflation? 1, prioritize saving. Try to find some extra cash that you can put away to prepare before price increases get too high. 2, don't pull your investments unless you absolutely have to, but really try not to. The market may take a dip, but the stock market has always been a roller coaster ride. Chances are incredibly high that your investments will bounce back even higher if you hang on to them. 3, don't give up hope. It may sound cheesy, but a positive mindset is incredibly powerful. As you know, we talk about that at Dow Janes all the time. So whatever is coming up for you in the next few months, just remember that you are informed, you are strong, and you are capable of handling it. All right, if you found this video helpful, be sure to give it a thumbs up. And hey, think about sharing it with a friend to give them a little heads up on what's coming up. All right, thanks for watching. See you next time.